Hello everyone, this is Istani, and as usual, let's first check the return of the previous package that I have introduced 2 weeks ago, and then let's see the new package for the next 2 weeks. Let me start this video with this famous statement that 95% of the people, they lose money in the trading, and only 5% at the end they manage to earn money from trading. The reason is that trading needs an emotionless discipline, which is difficult for human to achieve. And that's why I have chosen machine trading. In this strategy, I use a code which is equipped with different technical analysis to select a package of 8 or 15 stocks for a duration of 2 weeks. And at the end of these 2 weeks, I sell the previous package and buy a new package. And then bi-weekly, I post a new video to check the return of the previous package and also to introduce the new package. I have added 2 new features in the videos from 30 October onward. One of these new features is market forecast using machine learning technique. In this method, I'm using a machine learning tool and I train it with different market indicators in the past to forecast the future. However, at the end, such a method can be used only as a kind of hint and is not able 100% to predict the future because the market behave according to the new news rather than the similar condition in the past. Here, for example, you can see the forecast, 2 days forecast for Nasdaq Composite and 4 days forecast. The dot point show the forecast and the red curve show the price development during 90 days trading. And as you see at the end, this method is not able always to predict the future and also to predict the behavior of the market. The second new feature is a package of 8 stocks beside the normal package of 15 stocks for those who want to reduce the cost of brokers. However, at the end, the risk of such a package of 8 stocks will be more than 15 stocks because if one of the stocks in this package drop, the risk will be split among 8 stocks rather than 15 stocks, and as a result, the risk will be higher than 15 stocks. But the performance and return is more or less the same. Some years the 8 stocks has shown a better performance and some years 15 stocks. Okay, now let's check the return of the previous package. Let's first start with 8 stocks package and then I will show also the return of 15 stocks package. This package I have introduced and I have shown it on 30th of October. And these are the tickers and the buying price according to the Yahoo Finance. And these are the market close price on Friday. And these are the price development for each stocks, 60 days price development. And what I do, as I have explained in the previous movie, on Monday after market opening, I replace one by one the previous package with the new package. Then the price which I buy could be a little bit different than these prices. Okay, these are now the return of this package. These are the return of each individual stocks. As you see, the returns are changing between -3% and 11%. And these are the price development during the last 74 days. As we have bought this package sometime here, and these are then the price development during the last 2 weeks. And as you see, then the average of this package is something around 7%, which is much more than the market return. For example, S&P 500 was 2% during these 2 weeks.
And also maybe something else to mention, that as I have explained in the previous movie, I don't set any stop loss according to my experience, and also the sensitivity which I have done for a bi-weekly trading. Stop loss will not help to improve the return, even it can at the end lead to lower return. For example, in this package, this stocks has dropped more than 15%, around 16%, but at the end of the day, it has recovered to minus 3%. And if you have set any stop loss, then your return should be less than this. And now if we add the return of the previous package to our return since the beginning of the year, we end up something close to 18%. As usual, the cumulative return you can read on the right axis together with this orange curve, and the return of each individual package you can read on the left axis together with these bars. And as you have seen, the return of our previous package was close to 7%. Then when we add this, we end up something close to 18% since the beginning of this year. And now let's also check the return of 15 stocks. And this is the return of the 15 stocks package that I have shown on the previous video and on 30th of October. These are the returns of each individual stocks. And as you see, the returns of each individuals are changing between minus 5% and 13%. And the average of this package is close to 6%, which is again much better than the market. For example, S&P 500 was close to 2%. And again, this is the return without any stop loss and according to the buying price on Friday afternoon, and the selling price again on Friday afternoon on 13 November. Now, if you add the return of the previous package to our return since the beginning of the year for 15 stocks package, we end up something close to 8%, which is at the end lower than 8 stocks package. And again, you can read the cumulative on the right and each individual on the left axis together with the bars. And as you see, this package also with this package we didn't also break our record, which happened on the second half of the July, which was close a bit more than 8%, around 9%. And the minimum also of this year was close again to minus 8%. And before starting the new package, let's first have a look on the machine learning forecast for the next 5 days. As you, for example, here you can see the price development for different indexes together with the Bitcoin. And for example, there are also S&P and Jones and also Nasdaq Composite. And these are the current price. And this is the price development during the last 1000 day. And this orange curve at the end shows the forecast. Let's now zoom in on this last part. Here you can see the zoom in on the price development during the last part of the price development. The blue curve shows the price development during the past 15-16 days, and the orange curve shows the forecast for the next 5 days. As you see, for all of them, we don't expect a significant changes during the next 5 days. For example, for S&P 500, we expect first a reduction and then an increase. And at the end of the 5 days, we expect a small reduction compared to the current price. The price on the left axis shows the normalized price by the current price, and one means the current price. And the reason I focus on 500, S&P 500, is that there are more stocks included in this index, and the chances it follows the market and also prediction then is more than the other indexes. For example, in the previous video, if you have watched the previous video at this time, according to this forecast, we expected a significant reduction in S&P 500, 5-6%. As you see, this happened, and we have seen after the previous video, we have seen a price reduction, something around again 6%. However, during the second week, again, this has been recovered, and at the end of these 2 weeks, we have seen a price increase, something around 2% for S&P 500. Now let's start the new package for the next 2 weeks. These are the stocks for 8 stocks package that has been chosen by this machine learning and data analysis code for the duration of 2 weeks. Here you can see the price development during the last 60 days, and these are the tickers and the buying price, which means the market close price on Friday afternoon. And as I have explained in the previous video, what I do on Monday after market opening, I replace one by one the previous package with the new package. Then the price could be a little bit different than these prices. And yes, let's now see also the 15 stocks package for the next 2 weeks. And this is the 15 stocks package, and these are the tickers and the buying price according to Yahoo Finance, means Friday afternoon market close price. And these are again the 60 days price development for each individual stocks. I will post then the next video on 27, and we will check the return of this package together. And also, if you have tried the previous package, share with us your experiences. And if you have any comment also about this package, please write down in the comment. And then we will hear about this package. We will check it together on 27. In the rest of this movie, I will go quickly through the performance and return of this method since the beginning of 2017. For those who has not watched the previous video, as I have explained at the beginning of the movie, I select these packages with code which is equipped with different machine learning and technical analysis. And for a duration of 2 weeks, at the end of these 2 weeks, I sell the previous package and buy a new package. Here you can see the return of this method since the beginning of 2017 until May 2022. The orange curve together with this right axis show the accumulative return, and the blue bars together with this left axis show the return of each individual package. And as you see, the accumulative return of this method since the beginning of 2017 reached something around 400%. And let's now check the return of each individual year.
Starting with 2017, here you can see the performance of this method in 2017. Again, on the right axis, you can see the accumulative return, and on the left axis, you can see the return of each individual package, which has been shown with the bar here. And this orange curve shows the accumulative return of this method in 2017. As you can see, at the end of the year, the cumulative return of this package was slightly more than 40%, and the minimum return which happened at the beginning of April, was something around -2%, and the maximum return happened at the end of April, which was something around 6%.
And 2018, as you know, 2018 was not an ideal year for trading. However, as you see at the end of the year, the return, the accumulated return of this method was something around 8%. And as you see, during this year, the minimum return was something close to -6%, which happened the second half of the January, and the maximum return was something close again to 6%. And for 2019, here you can see the return of this method. As you see, the cumulative return in 2019 at the end of the year was something around more than 40%, 43%. And the minimum return happened at the end of, close to the end of the May, and was something around -5%. And the maximum return of this year also was a bit more than 5%, let's say 6%. In 2020, as you know, at the beginning of the year, we had a sharp drop in the Actian market due to the pandemic. And however, during the rest of the year, this has been recovered. And at the end of the year, the cumulative of this return reached something close to 25%, 26%. And the maximum return happened at the beginning of the April and was something around 15%, and the minimum happened in March, and it was less than -20%. In 2021, as you know, it was a very good year for the trading, and as you see, the return of this method, the accumulative at the end of the year, was close to 100%. The minimum return was something around -3%, which happened in November, and the maximum return was more than 9%, which happened in October.